So all the mega caps have pretty much reported, and it has been nothing short of madness out there. Normally in a mega cap stock, a 5% swing is a big up or down move, and maybe you get to 6 or 7% at the extreme until it settles. But not this earnings season. 20% moves are the norm, and it would appear that it's random, especially with Amazon's earnings kind of basically missing, and it's still skyrocketing, and Tesla having a huge beat and it dropping huge. It makes no sense. Or does it make sense? So I'm going to give you the why behind this. I'm also going to drop some nuggets of information in there that you can apply to any stock and give you my personal thoughts on each of these stocks. Are they a buy? Are they a sell? Basically, what's my play on each of those? I just ask in exchange for you to gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype. And are you against having a team of investors, including me, working directly with you on how to value a stock or find great stocks or even how to raise cash? If not, then you need to know the sale was just extended for a couple of days to join the Market Insiders private group where you get full and direct access to me and a group of 6- and 7-figure investors, and you get access to 4 free courses that teach you how to plan, do evaluation, build up your cash, and you get to see my watch list with price targets, my buy and sell alerts. We got live weekly Q&As, exclusive videos, and a ton more, so check out the pinned comment. And before blasting me for promoting it, I have no ads, no sponsors. This is what YouTube pays me a month, and I give half of that and half the group's proceeds to charity. So let's take these in order, and we will start with Netflix first since it kicked off the wild swings in the market. Netflix not only had a huge miss, but their guidance was just awful too. I mean, it was literally the worst combination you can have, and it was ugly. So I basically expected a drop, but not this big though. It was really massive. It just took a beating and a half. Remember, this stock was at $700 just 3 months ago, and it hit a low recently of $350. That is remarkable stuff given how big this company is. This isn't a stock like Lucid that is high growth and got caught up in a hype run and needed to cool off. This is a huge, massive beast of a company. With this drop, you even saw Bill Ackman, who said the market was in a bubble in November and predicted another crash in November of 2020, if you remember that. He was basically buying up over $1 billion worth of shares of Netflix. So it even pulled that guy from one side to the other. So am I a buyer too? Nope. Netflix has never been right for me. Now, I'm not saying it's a bad company at all or anything else like that. I just did not feel the need to own this stock when I have so much Apple and Amazon, who also kind of compete in the space and give me exposure to streaming. I'm not bearish on the stock at all. It's just not right for me or my portfolio. But obviously its valuation is much more attractive now than it was just a few months ago. So Tesla was up next, and they had great earnings and set records everywhere, but guidance was not what was expected. Now hear me out before blasting me. I had to create a whole video explaining the details in my group to keep everyone from roasting me for not liking the earnings call itself. I was getting beat up, guys, and I had to defend myself and give them all the details. I love the numbers, I loved everything they are doing and are going to do, and my position has not changed one bit on Tesla executing. I have zero concerns about Tesla now or in the foreseeable future. Foreseeable future, if I could talk. I have no concerns now, future, whenever. I have zero concerns all the way around with Tesla. But Elon on a conference call is always a wild card, and in this environment, saying your primary focus is on a robot that has massive potential but is years away from actually proof of concept, much less profitability, instead of your primary focus being on the one thing that is just printing money, was going to send the stock down. In uncertain times like right now, investors are looking for certainty. They want to put that money, and more importantly, their investors are demanding that they put that money into companies who are focused on continuing to bring in steady profits, not focused on unproven tech that is beyond comprehension for most people at this stage. Elon chose to go a different direction, and the stock suffered. To me, this just means a golden opportunity to pick up more shares on the cheap. Right now, messaging matters the most, and they got it wrong, but the underlying business is great, so it's a free discount on the stock, unlike Apple, who is up next. Once again, Apple put on a masterclass in earnings calls and how to control the narrative around your company. Apple beat everywhere, and I mean, it's just ridiculous at this stage how they continue to do it quarter after quarter. Now, they didn't give formal guidance, but they indicated they see things getting better with the supply chain, and that, along with the performance, kind of lifted the stock up after it kind of slid into earnings. But guess what? It needs to slide more, and I hate to say it because it's my favorite stock, but it's still on the overvalued side, although if it stagnates for a little bit longer, it won't take more than a quarter for it to be fairly valued if they continue to perform like this. So Google reported next, and it was a good earnings. but they threw in a stock split and the stock just kind of went bonkers after that. Now, I've said it before and people get upset at me, but a stock split means nothing to me. If the company is undervalued, it's undervalued regardless of if the stock is $3,000 or it splits down to $300 or $30 or whatever. For old dogs like me that remember it, stock splits were just news that you read and went kind of cool and you kind of moved on with life. But after Apple and especially Tesla splitting in 2020, now people seem to think it's a catalyst for the stock. Now I agree, splits help the stock long term and the numbers kind of prove that out. And it helps those that cannot afford shares right now and cannot buy fractional shares. But it's not an actual revenue generating catalyst. Furthermore, if you could afford the shares and had no interest in Google at $2,500 before the split announcement, but now it's at $2,800 and you want to buy now at $2,800 because it's split and it may run up more, you are simply trading, my friend, and you're not long-term investing at all. Do not confuse the two, they're totally different. It was undervalued in my eyes at $2,500 and it has already given back some of its gains from the initial pop-up and it's trending down, so more opportunity may come for Google. And on to the biggest one-day loss in the history of the stock market, and that would be Facebook. Now there's lots of talk around this one. I mean, it was a huge miss, they lowered guidance, it was just ugly. Biggest one-day drop in the history ugly? I'm not real sure about that, but it was still ugly. If you've been invested in Facebook for, the past 10 years or so, they do this every time they revamp the business, but unlike the past, they have not seen this kind of slowdown in their growth like they're guiding towards now. The good news for them, they are still a profit beast. They are basically the most profitable out of this entire group. And the other good news is, its valuation is the cheapest out of the group by far. I mean, it's not even close. So I have added shares on this massive dip, but be forewarned. There will be more pain over the next few quarters as this kind of all shakes out, and investors remain unsure if Facebook can turn it around yet again. This time it's clearly not as easy as it has been before. And now onto the strangest earnings of them all, seemingly until you dig a little bit deeper, and that would be Amazon. Amazon missed on revenue, it really gave you nothing great with the guidance, and the huge EPS beat included the Rivian deal, right? I don't know how to pronounce it, whatever, Rivian deal. So they might not see those numbers again, so everything lined up for basically a 20% beatdown, but instead you got a huge run. Well, this actually happened for two reasons. Number one, the stock has gone nowhere for over a year. I mean, it's not like Amazon has been having earnings misses or, not giving you giant revenue numbers that would justify it going nowhere for a year, unlike a lot of the other mega cap members. They basically went nowhere for a year while all the rest of the mega cap members just kind of kept going up and going up and going up. It just fell out of favor, which does happen to stocks all the time. And when this happens, you can only beat down stocks so low, and unless there's just something shocking on the earnings call, the stock actually does go up on not a whole lot, and sometimes even on negative news. Oh, don't believe me? It's happening right now. Look at Robinhood, who I don't like at all, but they had a terrible earnings call, but it's up like 30 or 40% or something like that since its beatdown. I mean, it was just beaten down to a point where it couldn't go lower, and a terrible earnings call couldn't keep it lower. And reason number two, Amazon saw huge growth in ad revenue, and more importantly, Amazon Web Services, which especially with the Amazon Web Services, that is where their future growth will come from. And I remember just a little while ago, everyone kind of poo-pooing on the whole AWS thing, but now it's showing huge growth and huge revenue for Amazon. Thankfully, I've been adding big time to Amazon during this downturn as I think it's significantly undervalued, and kind of click this video right up here if you want more thoughts on all the YouTube drama, all the predictions from all the experts, and how to deal with this crazy market. But I want to hear from you. What is your take on the earnings madness this quarter so far? I'd love to hear what you think. So thanks for watching, and we'll see you in the next one.